For the first time in what seems like forever, trends are starting to finally emerge that show that we might be able to hit a buyer's market in Orange County before the end of the year. But is it likely, and what it's going to take for us to get there? That's what we're going to talk about on today's episode and more. Hi, I'm Josh Alexander from Orange County Housing Market News, your one-stop shop for all things Orange County real estate. So on today's episode, I'm going to be going over my July forecast for 2022 for all of Orange County. So in that, we'll go over what the housing market's been doing, what to expect over the summer in the housing market, and that all-important question on, are we going to be in a buyer's market anytime soon, and how do we get there? So let's go ahead and get into it. So like I do in all of these monthly episodes, I'm breaking this down into three different parts. So first, we're going to talk about what's been happening in the housing market and where we currently are right now. Next, we're going to talk about what to expect over the next couple months as we finish out summer in the housing market in Orange County. And then third, we're going to talk about what that actually means for both buyers and sellers as we go through the next couple months if you're thinking about buying or selling a home. And then finally, we're going to add a little bonus to this episode and talk about some of the trends that are emerging right now that show that we could possibly get into a buyer's market by the end of the year. And like I said at the beginning, how can we get there and is it likely? Stay tuned to find out. So first, let's go ahead and talk about what the housing market's been doing over the last couple weeks so we know where we are today. So let's go ahead and start by looking at the supply side first. So over the last 2 weeks, supply has gone up by 14% in Orange County. So we're now sitting at right around 3,500 homes. That's the largest 2-week jump that we've seen since 2018. However, we do want to keep that in perspective. So typically during this time of year, if you look before the pandemic, we had around 6,600 homes on the market. So we're still about 50% short of what we normally are for this time of year in Orange County. And if you want to look back even further, because a lot of people like to compare what's happening in the housing market right now to the last housing crash. Right before the last housing crash, we had 18,000 homes on the market. So you can see that we're nowhere near that right now. So those people that are concerned about some type of giant crash happening in the market, it's just not going to happen anytime soon. So now let's go ahead and look at the demand side of things. So demand over the last 2 weeks has decreased again by about 8%. It's been on a downward trend since the end of March, and it will continue doing that throughout the rest of the summer. So this continued downward trend in demand is definitely a little bit concerning. Demand hasn't been this low in Orange County since at least 2004. So it's definitely not normal. So why is demand so low? Everybody pretty much knows by now it's interest rates. The higher interest rates we've been seeing over the last few months have dramatically cut down the amount of people looking for homes because it's just become unaffordable for a lot of people, and a lot of people are still experiencing the shock of at the beginning of the year seeing 3% rates and then right now seeing rates hovering around 6%. It's a giant jump, one of the largest jumps ever in the housing market, so it's going to take a while to digest and get used to. So speaking of interest rates, since the beginning of June, interest rates have been hovering anywhere from 5.5% up to about 6.25%, which is a pretty large swing within just a month alone. And that's just an indication that there's a lot of things going on in the market, and we're really in the middle of a shift in the housing market. So right now, at the beginning of July, we're hovering right around 5.9% for the average interest rate on a 30-year fixed mortgage. So again, still very high. It's not the highest we've seen over the last 30 days, but it's definitely a high number. And interest rates seem to be pretty sticky right now around that range, and I don't see them going significantly lower anytime soon because inflation is still a huge problem in the United States, and inflation is the enemy of long-term interest rates. So the longer we have inflation, the longer you're going to see these high interest rates continue to happen, and you're going to continue to see demand decline. So supply is continuing to go up, demand is continuing to go down, and interest rates are pretty sticky right around that 6% mark. This is all leading to the average days on market, which means the time it takes for someone to put a sign in the yard to when it goes into escrow to rise pretty significantly. So we've seen the average days on market go in March from around 20 days all the way up to 60 days where it is today. So that's a significant change. The housing market has definitely shifted. We are no longer in this hot seller's market that we've been used to. We are now bordering on a very slight seller's market, which means that yes, we're still seeing appreciation, but appreciation has pretty much slowed to a crawl at this point. You're not seeing 10 and 15 offers on every single property anymore. A lot of times it's taking weeks for it to get a single offer on a property, and a lot of times homeowners are not getting multiple multiple offers on their properties anymore, which again is slowing down appreciation. Now again, I like to always give perspective on what that actually means. So if you look at an average market, so the 3 years leading up to the pandemic, this time of year, the average days on market was actually around 75. So we're not quite there yet. However, we are getting very close to what the average is for those days on market. And again, I always like to compare it to what happened in 2007, right before the housing crash, so you can understand how significant the difference is from where we are now compared to back then. So back then, the average days on market was right around 400 days. Over a year on the market. That was the average days on market in 2007. So again, we are nowhere near that. We are not going to see a giant housing correction anytime soon. I just want to keep reiterating that over and over again so you can understand that's not something you should be expecting in the housing market anytime in the near future. Okay, so that's where we are right now. The housing market has shifted, but what does that mean for the remainder of the summertime? So what should you expect if you're thinking of buying or selling a house? Well, traditionally in the housing market, we usually see inventory peak towards the end of summer, and we usually see demand peak towards the beginning of summer. However, this year, demand peaked at the end of March and has been going down ever since, like I just stated. So demand definitely peaked a lot earlier, and because of that, we're expecting inventory to peak a lot later. So inventory is probably not going to peak until sometime in the very late fall, closer to the holiday season. So what does that mean for buyers and sellers? It means that as every week goes by, we're going to get further and further away from that hot seller's market and closer to a balanced market where neither the buyer or the seller has any specific advantage during negotiations when you're trying to purchase or sell a home. So what is my advice for both buyers and sellers? So let's start with sellers first. Sellers, if you want to place your house on the market this summer, you need to do so as soon as possible if you want to be able to get the best price as well as the best terms. I've talked about this last month, but the market, like I said, is slowing down every single week. So the longer you wait, the harder it's going to be for you to find multiple buyers and for them to help drive the price up to get the best price for your home and the best terms possible. So if you're thinking about selling your home this summer, it's really important that you don't wait any longer. You need to get it on the market as soon as you can. And it's especially important if you're trying to sell your house and buy another house at the same time, because it all comes down to those terms in the contract when you're trying to do so, because there's a lot of moving parts. So for instance, a couple months ago, if you were trying to sell your house, you were most likely able to find a buyer that was wanting to purchase your house and would let you live in that house for another month or two, maybe pay rent, maybe rent free, while you go out and try to find a new home. However, today, buyers are less and less willing to do that because they're not competing with so many offers anymore, which means that if you go to try to purchase your own house after selling yours, you're going to have a much shorter time frame to do so, which is going to cause a lot more stress, and it may cause you to compromise on your new home because you're running up against deadlines. So not only is it important to get your house on the market as soon as you can to get the highest price for your home, but the longer you wait, the harder it's going to be for you to negotiate those terms within the contract to make your life easier and a lot less stressful if you're trying to purchase a home on the back end as well. Another thing that you want to remember is, again, we are no longer in a hot seller's market. You have to understand that. Every single week, we're seeing more and more price reductions as sellers are finally getting used to this new market where they're not able to get multiple offers that first weekend anymore. So if you don't price your home correctly, out of the gate, starting out, you're going to have an extremely hard time selling your home for top dollar. The longer it sits on the market, and I've said this probably almost every single episode, but the longer your house sits on the market, the harder it's going to be for you to get the best price. Those first 2 to 3 weeks is when your house is showing up on Zillow, on Redfin, on the front page. After that, it's making its way farther and farther down, becoming harder and harder for new buyers to find your property. So if you don't price it out of the gate correctly, you're really shooting yourself in the foot and really taking away all those buyers that could be interested in your home at purchasing it at a fair market value. And at the end of the day, you're going to have to end up lowering your price and eventually most likely sell it for less than you could have if you just priced it correctly out of the gate. So what is pricing correctly in today's shifting market? Pricing correctly in today's shifting market means that you need to find the latest comparable sales, and you probably need to price it at that price, maybe slightly higher, but not very much, because buyers have been quicker to understand that the market has shifted, which means when they place their offers, they're no longer placing offers 50, 100, 200,000 above asking price anymore. They know that they no longer have to do that for the majority of homes out out there. So when they place offers, they're placing it at comparable market value, but not much above, if at all. So if you place your home on the market much above that, you're just going to be losing a lot of buyers, a lot of interest. And again, it's just going to be harder for you to sell your home in the long term for the top dollar and also the best terms. So make sure you price it out of the gate correctly, or you're really going to have difficult time selling in this market. So now let's go ahead and look at the buying side of things. So like I said, buyers, every week that goes by, you're going to have more inventory to choose from and less competition. So that's great news for you altogether. However, the biggest thing that you need to remember right now is that we are still in a slight seller's market, and we will be that way at least for the next couple months. So what does that mean for you? It means that if you're waiting till the end of summer to buy, or even early fall, odds are you're going to be paying more for that same house than you currently are right now. Because even though appreciation has started slowing down, it is still continuing to happen in the housing market. So the longer you wait, the more home prices are going to go up, and the more homes you're going to be priced out of. So if you're thinking of buying a home in the next couple months, make sure you get that pre-approval ready to go. Start hitting the ground running right now. And when you place offers, you need to place offers that are competitive, but you don't have to go overboard like you had to a couple months ago. You don't have to place those offers that are taking off all the contingencies, that are going $100,000 above asking price. You can be reasonable when placing offers on home, because most sellers are only getting a few offers per house right now. So the competition is just not like it was a few months ago, which is great news for you. However, you need to remember that it is still a slight seller's market. So sellers are still having a slight advantage over you. So you can't go out there and lowball offers and expect sellers to respond to it. Now, obviously, the bad news for buyers is that interest rates have continued to climb, and they're still hovering right around that 6%. So if you're trying to buy a home today compared to the beginning of the year, it is much harder to buy a home. It's much less affordable than it was just a few months ago. However, the biggest thing that you need to focus on as a buyer right now are those monthly payments. Can you afford that monthly payment? Can you get into the area you want to get into with that monthly payment without financially stressing you and your family out? If the answer is yes, and you're planning on being there for the long term, which is 5+ years, then now is still a great time to buy a home. If interest rates end up dropping for some reason towards the end of the year or early next year, you can always refinance and end up paying less for your mortgage. However, if they continue to go up, or if prices continue to go up, you're going to be kicking yourself later on for waiting so long, because homes are just becoming more and more unaffordable. Now, the one group of buyers that I would caution about purchasing a home right now are those buyers that are looking to purchase and sell quickly. So if you're trying to buy the house, flip it, do some updates, and then sell it in a year or two from now, now is probably not the best time to look at most deals. There's always going to be deals out there that make sense financially, but most deals right now you want to be cautious of, because we are going through a market transition right now. So the risk to you, especially if you're buying short term, is going to be a lot higher than any of the buyers looking at properties that want to be there for the long term and want to find some place to raise their families. So if you're buying for the short term, I'm not saying don't purchase, but I am saying that you need to evaluate those deals very carefully to make sure that you're not overpaying, and to make sure that you know what you're doing in terms of how much it's going to cost to do the flip and how much profit you can make from it. Because if you go into it unexperienced or not knowing what you're doing, there's a good chance that you could lose money when markets are transitioning like this. So if you're trying to speculate, time the market, you have to be very careful about buying a home right now. Now, the one last thing that I will say for buyers right now, if you've been hearing the market is shifting and you're thinking that I'm gonna wait until housing prices start dropping before purchasing a home, and I'll just go ahead and buy it then for a discount, you have to understand that the most likely reason that home prices would come down in the future would be that interest rates continue to go up. And if interest rates continue to go up, that's going to erode how much house you can afford. And when you go back to that monthly payment we're talking about, when interest rates adjust just a little bit, that has a much larger effect on your monthly payment than housing prices going down a few percent. So if you want further explanation on this and see exactly what I mean, go ahead and check this video out up here if you're watching on YouTube. It basically goes over what happens when you purchase a home when housing prices drop but interest rates go up, and you can see how dramatically the monthly payment's going to change again when you look at the interest rates going up at the same time home prices are going down. It's pretty eye-opening happening, and it really shows you that if interest rates continue to rise, housing prices would have to drop dramatically in order for it to make sense for you to go ahead and wait to buy a home until housing prices drop. So check that out up there. If you're watching this on a different platform than YouTube, then I encourage you to go ahead and go over to YouTube, search for Orange County Housing Market News, check out the channel, and you'll be able to see the link there. Okay, so we went over what the housing market is currently doing. We went over what to expect for the rest of summer in the housing market, and I gave you my advice for both buyers and sellers. So now let's go ahead and get into that bonus material, which is, should we expect the housing market to get into a buyer's market before the end of the year? And if so, how likely is it that we'll be there, and what will it take for us to get into that buyer's market? So let's go ahead and see how we could actually get into that buyer's market to begin with. So based on the current trends right now, where we're seeing demand continue to go down, supply continue to go up, and interest rates remaining relatively stable around that 6% mark, if those trends continue, there's a good chance by the end of fall that we'll be into a balanced market where neither buyer or the seller has any distinct advantage when they're negotiating their deals. So if we see these trends continue throughout the rest of the year, where interest rates either stay the same or continue to rise, you can expect demand to continue to go down and inventory to continue to go up as we finish out the year. And that's going to transition us most likely out of a balanced market and into a slight buyer's market. So a slight buyer's market is when the average days on market is going to be over 120. So again, right now we're hovering around 60, but it'd have to be over 120 to get into a slight buyer's market. And the thing I want to stress about a slight buyer's market is it's not a switch. So we don't all of a sudden get into a slight buyer's market and all of a sudden housing prices drop by 10 or 20%. That's just not how it works. The housing market moves relatively slowly. So if we did get into that slight buyer's market, we would have to be there for a few months before you saw any significant impact on home values. So even if we did get into a slight buyer's market by the end of the year, we probably wouldn't see any significant impact on housing prices until 2023. Okay, so based on the current trends and based on the data we have, how likely is it that we'll actually be in some type of slight buyer's market by the end of the year? Well, I don't have a crystal ball, so it's very hard to predict these type of things. And as COVID has taught us, really there's too many factors to be able to accurately predict what the housing market is going to do. However, what I can do is give you the data and give you the most accurate information that I have at this time to try to give you an idea of what to expect as we go through the end of the year. So right now, the Fed is being extremely aggressive on trying to get inflation to go down. And like I said, inflation is the enemy of long-term interest rates. So they're raising interest rates at a much faster pace than most people expected at the beginning of the year, and they're continuing to raise it, and they're trying to get inflation to hit that peak and start going back down. Once inflation hits that inflection point and starts going back down, that's when you can expect interest rates to start going back down with it as well. Now, when will that happen? It's extremely hard to say, but I think there's a good chance that sometime in the fall, we'll start to see that inflation peak and start to slowly go back down as the Fed continues these rate increases to try to tame inflation. So if that happens in the fall time, that's actually a perfect time to happen for the housing market, because by the fall, we should be in that balanced market that I was talking about, where we have inventory high enough that when interest rates start going back down, demand starts picking back up, there are plenty of homes to choose from, and what that will end up doing to the housing market is put us in a balanced market for a much longer period of time going into 2023. So I think that is a far more likely scenario to happen than us getting into a buyer's market by the end of the year. However, again, I don't have a crystal ball. There's a lot of factors that we just don't know and can't predict that could impact the housing market. But I wanted to give you at least my opinion on what I think is the most likely thing to happen in the housing market. Now, again, this is just a prediction and some speculation based on my research in the housing market. However, if you're trying to buy a home and you're not an investor trying to buy for the short term, you need to be focused on what is best for you and your family today. You shouldn't be trying to time the market and gamble to try to figure out where the top is, where the bottom is, because ultimately no one really knows what's going to happen. So you need to figure out what's best for you and your family today, and if it makes sense to move forward with purchasing or selling your home, that's the right decision for you. So you need to be asking yourself a couple questions. Number one, if I move, is that going to improve the quality of my life? Number two, do I have the budget to do so without putting financial stress on me and my family? And number three, am I planning on being there for 5+ years? If the answer to all three of those are yes, then you should probably start looking for a home or try to sell your home and look for a new property starting today. If the answers to any of those are no, then you probably want to reevaluate your decision and figure out if buying or selling now is the right thing for you and your family to do. Because ultimately, buying or selling a home really comes down to what's the best personal timing for you individually, and does it make sense for you to do it today? And again, if you answered yes to those questions I asked before, it really is not going to matter if the market corrects slightly over the next couple months or if the market goes up, because you're in it for the long term, and over again it's been shown that real estate continues to appreciate when you're in it for the long term. So if you found this content useful, can you do me a favor and hit that like, subscribe, and if you're watching this on YouTube, that bell button as well. That way you're notified every single week when I release a new episode, so you don't miss any great information about the housing market. If you do have any family or friends that might be interested in this information, please consider sharing it with them as well. I would really appreciate it. So until next week, stay healthy, stay happy, and I'll see you on the next show. Bye.